Hi, and welcome to this edition of the Coronavirus Freight Market Update for April 9th, 2020. My name is Kevin Hill, and I'm joined here with Michael Vincent.
Hello, everybody. Welcome.
And this is where we talk about what's happening in the freight markets, coronavirus related, and generally, everything about the freight markets, not only in the U.S., but around the globe. So basically, we have a great show for you today, great guests. Basically, we have Craig Founder, our CEO and founder of FreightWaves, to give us his analysis of the freight markets.
Yeah.
And we also have Clarissa Hawes, she is a FreightWaves reporter who published a story on really non-competes and layoffs, specifically at TQL.
Yeah,
and she'll be on to discuss that deep dive journalism that she did.
Yeah, that'll be interesting to talk to her.
It'll be very
It's always
interesting
to get Craig Fuller's take on things.
Yeah, it will. It definitely will.
That's going to be good.
Yeah, but before that, we have the news and by the numbers first. But we also have Anthony Smith and Andrew Cox coming on.
Let's go through the numbers here before we go to who's up first? Andrew after this, I guess?
Yes.
So let's go through the numbers. So on Tuesday when we did this, U.S. coronavirus case count was at 367,719. Unfortunately, today we are at 434,861. Deaths were at 10,943. We are now at 14,814. When we started this, Kevin, on March 17th, we're at 6,300 cases and 110 deaths. So, the grim predictions are coming true, right?
They are coming. They are, yeah. So they are coming true. We are getting closer and closer to hopefully the apex of the curve.
We
right?
are, yeah. You're exactly right. And so, according to the IHME, Institute for Health and Evaluation at the University of Washington, we are now 3 days from the peak, and this has changed. So we started talking about this.
Peak?
It's for the U.S.
For the U.S. Okay.
So we started talking about this on Tuesday. I started bringing this up because there are interesting statistics on predicting where the peak is going to be. And so we're 3 days from the peak. And on Tuesday, we were at the peak showing 3,130 deaths. They now have revised that down to 2,151. And that's on a day-to-day basis. So that's a grim statistics.
And that's for the United States, right?
Yeah, that's for the United States. And a total death count around 60,000 sometime by the end of May, mid to end of May, versus on Tuesday they were thinking 81,000. So they've reduced that peak death count and case count quite a bit, which is great news. I mean, those numbers are still people's lives being lost, so we definitely have to adhere to the lockdown, the social distancing, and all those advices that we're getting in order to hit these and hopefully beat these predictions as well, bring those down even further.
Yeah, I think that's been the key is human behavior. We really have followed these stay in place, stay at home policies that basically 97% of the population is under, and I think everyone is taking this very seriously as well as they should, and that's really has helped basically the forecast and the models come down off those really scary number highs to still scary numbers, but dramatically less. So basically on the backside of the curve is kind of where the next danger spot is, because it's still we still need to keep these policies in place for I don't know how long, and nobody really knows how long, but there is that backside of the curve that is still a danger zone. Yeah,
and the officials keep reiterating so far. It seems like the containment measures and what we're doing responsibly is working so far, and it's bringing down those predictions. It's starting to flatten those curves, and the key is so far keep doing what we're doing, right? And don't just it's over, we've beat this. No, we're nowhere near that, right? So we need to stay responsible and keep moving forward, and so hopefully we can do that as things get better and better.
Yeah, exactly. You're exactly right, Vincent. We need to keep these policies in place, and there will be a light at the end of the tunnel relatively soon. But with that said, let's move over to the news and our great friend Andrew Cox over here and see what's on FreightWaves.com today. And I guess the first one is hours of service. Do you have an update on hours of service for us, Andrew?
Hey, Lens, thanks for having me. I do. So John Kingston wrote an article yesterday, or today, excuse me, about the FMCSA extending that hours of service waiver that was set to expire on Sunday, April 12th. They know that that deadline is rapidly approaching, so they have extended the deadline to May 15th, excuse me. So this has a long list of things that are covered under this waiver that include medical supplies, food and paper products, and groceries, anything that's for emergency restocking of distribution centers. The exemption does not cover routine commercial deliveries, and it actually extended or reiterated an earlier clarification that the waiver does not apply to mixed loads with a normal quantity of qualifying emergency relief, meaning that if you were going to be waived from your hours of service, you have to be having a full complete load of those listed items.
Andrew, did it expand anywhere else? Did they adjust where there were other commodities that would fall under this waiver, or no?
They did. So they did expand it in one way. The waiver now applies to transportation of liquefied gases used in refrigeration and cooling systems. So everything that is keeping our refrigerators and our cold systems going. This can be used for medical supplies and for food as well. Those are now included under the hours of service waiver.
Nice. Well, I saw where there was, I think it was New Jersey changed the weight limitation for trucks, gross vehicle weight to 46 tons, I believe it was. Wasn't that, Kevin, that we saw yesterday?
I believe so, yeah.
Have you heard, Andrew, of any other states changing the weight limitations or anything like that, or have you heard anything like that?
I haven't, and I don't believe John included any in his article, but I'm sure as more states are pushed to their boundaries of making sure that their goods are replenished and that their hospitals have enough medical supplies, I'm assuming that many states will follow in New Jersey's path.
Interesting.
Very good. And we do have a reader comment here, or a viewer comment. I always call them reader comments, but they're viewer comments. And it kind of goes back to, and I'll throw this over to Andrew because he is in the middle of writing the DHL Supply Chain Pricing Power Index for this week. And this kind of has to do with market conditions. So I'll throw this over to you, Andrew. And this is from Ken Elrich. He's an instructor at Brook Training Solutions. How does the industry plan to increase load rates for trucks so that they are still around when we need them? So basically, you've been doing a lot of market analysis. Give us your 1 minute type of analysis.
So I believe the question is somehow how can the government or how can the environment subsidize spot rates to make sure that we have trucks moving? Is that correct?
Yeah, that's correct. I mean, we were looking at spot rates and contract rates and load volumes this morning right before we came on, and we saw everything's dropping. And basically, what were kind of the market conditions on that and basically any government?
Sure. So volumes have completely plummeted. We're now at the same level on the outbound tender volume index as we were on February 17th, so pre-crisis levels. And there's really no floor in sight to where these volumes could fall. We've talked about ad nauseum how much of the freight volumes are not only tied to small businesses, but are tied to things that are just not moving right now. The only things that really are moving are food, packaged goods, and medical supplies, and that doesn't even make up the majority of freight. So yes, the spot rates are going to continue to fall, as I've noted in the DHL Supply Chain Pricing Power Index today, that of the 100 lanes that truckstop.com gives us for spot rates, only 5 of them had increased spot rates week over week, with the vast majority of them down in the 5 to 10% range. So spot rates will continue to fall. They have been falling for the last week. They're going to continue to plummet. I don't know how the government steps in directly to subsidize spot rates like that. I just see that the small business loans and things involved in the CARES Act and the economic stimulus bill, that those carriers should go out and try to apply for those and get as much of it as they can, because, again, there are rough times ahead.
Very good. So another article on FreightWaves.com is from Mark Solomon, and he's talking about Amazon putting on hold, at least temporarily, their third-party logistics type of or not third-party logistics networks, but the third-party sellers that basically those outside distribution. Can you highlight that a little bit, Andrew?
Sure. So the name of the project was Amazon Shipping. It was released to pretty good excitement. It was looked to be one of the biggest transport networks that Amazon has ever built out. It was going to rival that of FedEx, UPS, and USPS. It was a parcel delivery business for those outside of its retail and fulfillment universe. Again, in this time of where they're having to make decisions that are life or death, Amazon has shifted focus away from this project of Amazon Shipping. They're now, we've seen that they've hired already 80,000 people with the thought and plan to add more in the next coming weeks. Amazon has just shelved it for the time being. They have made no public announcement whether this thing will come back, whether this is temporary or not. But the truth is that they just have their focuses on other places right now.
Great.
Yeah, and in addition to that, Andrew, there was a kind of a perception out there that it really wasn't living up to the billing. It wasn't as successful as they wanted it to be prior to this change in their priorities. Is that correct?
That is correct. It hasn't come out to the size and scale that Amazon had kind of preached it that it could be. So people look at it, especially shareholders, they look at it as not so much a failed project, but something that was sputtering along, and really just time for Amazon to shut the door on it for now and put complete focus on the coronavirus.
Yeah, so rather than retooling it and trying to get it to where it needed to be, it's better to focus on the time right now, on the necessities right now.
Right. I mean, Amazon has now become one of the sole places that people can go and get goods. A lot of their local stores are shut down, and while the delivery timetable might be a little bit longer than normal, people are still relying on Amazon to get a lot of their consumer staples and things, so they don't have to leave their house, and so Amazon needs to focus on that.
Thank you very much, Andrew. And to catch other headlines, we have some rail data, and Port of LA is down sharply. Those articles are on FreightWaves.com as well. But we'll move on to our next. Actually, we have another viewer comment, and that is, you'll be a good person to ask this, Vincent.
All right.
What is SONAR seeing as asset-based providers networks have changed drastically with COVID disruption to many industries and businesses? And this is from Christopher Glassbach. He's the Chief Revenue Officer at Shipwell.
So what is SONAR saying right now?
Yeah,
the effects of what's going on right now?
Yeah, the effects of changing networks, that basically the COVID response and shipments, how that's changed the landscape and what we're seeing in SONAR.
Well, yeah, it's changed the landscape quite a bit, actually. So, we're looking at the huge spike and then now the fall off. But what is happening now is this fragmentation that we keep talking about of where things are, as you're being driven into, as shippers change what they're actually shipping, as we've seen in many cases and talked about it, where GM is now producing supplies and so on, so is 3M, et cetera. And now those lanes, there seems to be more irregular routing or irregular lanes, right, that are moving, and capacity finds itself not on those regular lanes, and therefore having to deadhead into other areas, right? So it's causing it is causing this fragmentation of capacity where it's not where it needs to be. Now, certainly rejections are, and capacity is loosening, and rejections are dropping across the board, but there are still those areas where they're still very elevated, even though they are dropping, and it's changing from day to day, Kevin. It's all over the board.
And so, one of the things that's changing, or one of the effects of these daily changes, is what Anthony Smith is about to highlight for us, because today the initial jobless claims came out this week. 2 weeks ago it was 3.3 million. Last week was 6.6 million. What were the numbers today, Anthony?
Big number again, 6.7 million, I think it was this morning, just under expectations. I had a chat with Zach Strickland just yesterday, talking about expectations for today's numbers, thinking that the upper limit might be around 7 million. So thankfully it's still under that 7 million number, but 6.7, nothing to just sneeze at. I mean, this is another huge spike. I mean, looking at the last 3 weeks, we're well over that 16 million mark. We're looking at overall initial jobless claims, so a substantial number.
It is a substantial number. Indeed, it is. And that puts us over the last 3 weeks with just a little over 16 million initial jobless claims, or people initially filing for unemployment. Kind of back of the envelope math, do you have an idea of kind of what that really means for, say, the unemployment numbers that came out last Friday, kind of what the true unemployment number is right now?
Yeah, so that true unemployment number could be anywhere from, reaching up to upwards of hitting that 13% mark, potentially. I know, of course, this is going to vary regionally and very much state by state. So when we're looking at jobless claims, this is essentially a survey taken from each state individually. Then it's compiled into this estimate, then it gets revised usually week to week. But when we're looking at jobless claims, initial jobless claims for a week-to-week basis, there's no mistake that there's a correlation between the states that have been hit the hardest by the coronavirus. So we've definitely seen a large spike in New York, Michigan, California, also another state that's been hit hard. We're looking at initial jobless claims coming in just from looking at a large pipeless areas that are typically, usually highly trafficked areas as well. And again, areas that are being hit the hardest overall as of now, when we're looking at the overall trends throughout the country. Another big aspect is when we're seeing that these jobless claims, we're also looking at employees or former workers that are unable to apply for new works because of these restrictions. And so that could also be somewhere near the million to 2 million mark of looking at the number of individuals that are unable to actually apply for work because of restrictions around the coronavirus.
So,
Go ahead.
So basically, there's talk in Washington D.C. of another $2.3 trillion basically stimulus bill, or is that something from the Fed? Do you have some information on that, Anthony?
Right. So just this morning, we've heard from Chairman Powell, and the Fed, of course, announced a initiative of $2.3 trillion, I believe. The details are very few. It's all very new right now, so it's definitely going to be developing, and a lot of details still need to be fleshed out. But when we're looking at that, the thing that has really been prevalent over the last few weeks is that small businesses are struggling. And that's really been one of the emphasis that we've really hit on hard here at FreightWaves throughout much of our coverage of this, is that if anyone needs this money, it's going to be a lot of those small businesses, even though large corporations really move the needle when we're looking at a lot of the GDP growth, things like that. We're looking at the number of employees really being affected. That's really going to come down to small businesses. And right now, those small businesses are struggling. Many small businesses aren't prepped to go without operations on a week-to-week or a month-to-month basis. So they're being hit hard. And of course, them being hard is really limiting the amount of employees they're able to retain, if any at all.
So, Anthony, kind of almost a two-part question, but when I see these things, these are the kind of questions that come to my mind. So we're seeing a 6.7 million in the latest, right? The jobless claims. And we keep talking about the fact that this, the service industry, right? Consumer-facing roles, retail, restaurants. I saw a thing on catering and how large the actual catering industry is that is getting hit as well. Are we seeing that change at all? Are we seeing additions in manufacturing, et cetera? Are there numbers on that? Do we have any insight on that? And as the peak or the curve starts to flatten in New York, it starts to rise, or there's other parts of the country where they have yet to get to that peak, right, where the outbreak is spiking. Do we see that adding to this total 6.7 to 7 million, et cetera, or do you kind of see it wavering there as some come back online and others? You have any insight on there or any thoughts on that?
Mike, Vince, I think you're exactly right. We're looking at not just consumer-facing segments, but also manufacturing. They're also going to get hit hard here. A lot of, I think you've mentioned a few manufacturers that are able to convert their efforts to medical supplies. We're looking at ventilators and things like that, 3M. And so when we're looking at that, that's not going to be the truth for many other manufacturers. So we are seeing that there are shutterings of many factories throughout the country. And so we've seen that in the latest PMI numbers supplier deliveries really kind of inflated the overall PMI results from last week. But we did see that new orders were down into that 40 range, so well below that 50 threshold, showing that there is expectations of contraction within the manufacturing segment. As we move forward, because this is so state by state and hitting different regions harder than others, I do expect that it's not going to be a one-size-fits-all, and that we are going to see some states kind of come online a bit quicker than others. The whole thing behind that is there going to be incentive behind that to really kind of spur that recovery. Chairman Powell mentioned this morning that he expects the recovery process to be rather quickly once we get on the other side of this whole thing, but that's going to really kind of dictate to the path of the coronavirus, and of course what kind of incentives are going to be put in place to help support those small businesses and those consumers to really kind of facilitate being active in the economy once more.
Interesting. I hope he's right on the quick recovery. I've been reading some things of, rivaling the Great Depression and lasting 2-3 years and doom and gloom and that type of stuff. I vote for the V shape.
I vote for the V shape too. Thank you very much, Anthony Smith. As always, great insights on the economic side. So I believe we have our next guest, Clarissa Hawes, who has a great article up on FreightWaves.com right now. And a couple of viewers, thanks Clay Longwith and Kevin Wright. And Kevin Wright had, 6.8 million jobless, or 6.7 million.
Right.
Just think of the number of those who still cannot get through to file. Example, Miami having to file via paper forms. So a lot of the 1099 independent contractors I know in quite a few states are still having to talk to actual people.
Yeah, I'm sure the processing is struggling right now, right?
With the
influx. So that's not good news.
We'll probably
Hopefully
see some spillover effects over the next couple of weeks as we work through this. But that double,
million.
2 weeks in a row at plus 6 million initial jobless claims is shocking. But we're
right.
I guess we're getting used to having a lot of shocking numbers. I don't know if Clarissa is. Oh, there you are.
There
I
she
see
is.
you right now, Clarissa. How are you doing this morning?
Good. Thanks for having me on today.
Very good. Thanks for coming on. So you have a very intensely researched article on FreightWaves.com right now, and it is TQL, bully on the block, ? And it really has to do with a couple different facets, but starting with, they've had some issues lately with the malware attack a few months ago, as well as a few layoffs, hundreds of layoffs in the last 3 weeks. And now what's going on in TQL's world right now, Clarissa?
Well, in talking to current and former employees, they reached out to discuss some of the claims that TQL made that the people were fired because they didn't hit their sales goals or were underperforming. But some current employees there reached out and felt it was important to tell the other side that these employees were doing their job and doing it well, and it came down to they didn't have the bandwidth to have everybody work remotely. And so they just started looking at different ways to kind of thin the numbers.
Yeah, in addition to that, you had some really good stuff. They had the malware attack and so on, and the layoffs, as Kevin was mentioning. But what'd you find out about did you find information about their response to working during the coronavirus pandemic? Of how were they helping those employees through that?
Well, publicly, from what my sources say, TQL was allowing all of its employees to work remotely if they asked. But they, also came forward and shared stories where that wasn't true. Or that if they complained about working remotely, because they worked in such close proximity to their colleagues, that if they complained using the company's instant messaging system, they were let go. That was one of the criteria that leadership had asked its, the quality assurance department to look at, or if they were critical of leadership. So those were things that they used to, fire even more.
So pretty severe retaliation type of claims and fears going on there.
Yes, and that's the thing is it took multiple conversations with some of my sources because they are so fearful of retaliation and lawsuits.
And talk about and speaking of lawsuits, you've seen quite a few logistics companies, or at least some logistics companies, that have waived non-compete during their layoff processes because it's a very difficult freight environment right now. What is TQL's kind of stance and history on enforcing non-competes with their former employees that either walked out voluntarily or were terminated?
Sure, they do use an aggressive strategy. And I've seen court filings where a former broker was 2 days shy of his 1 year with the company and flew to, for an interview and was hired. But it didn't start working until after his non-compete was up 2 days later. But they came after him, and it was a 2-year lawsuit.
And there were... And they were on the hook for, I guess, lost profits and attorney's fees. Explain a little bit further how that works.
Sure. Like if they could prove that they, and some had gone to work for new companies, and if they could prove maybe that they had made $2,500 or something in commission or something during their time there. Even if the broker, the employee said, I'll settle, I want this over, I don't want a long drawn out process, it just kept getting continued until finally, when it was over, they were on the hook for hundreds of thousands of dollars in attorney.
And are most of these non-compete lawsuits filed in one county in Ohio, in county court? Is that accurate?
Yes, a lot of them are filed in Claremont County, and some have had them kicked to federal court, and they seem to have better luck there. But even attorneys that I talked to said that their non-compete contract is it's pretty ironclad.
Yeah, I guess there's certain states where it's not quite as ironclad, but those are few and far between, right? I think California is one that TQL kind of avoids because of that reason.
Right, exactly, and that's what sources said that they do that.
Yeah, and these are not non-solicitation type of things. They're non-compete, so they can't work for a competitor. It's just not just non-solicitation.
Right.
Yeah. So non-solicitation. Oh, go ahead, Clarissa. Sorry.
Oh, sure. No, you go ahead.
Oh, yeah. So basically, non-solicitations that you can't contact your former employees' customers, where non-compete is you can't work in the industry.
Right.
And TQL goes off that non-compete, correct?
Right. And it's not even just brokers. It's anybody that is an employee of their firm. Basically, if you're in a support role where you don't really have a customer base, or a book of business, they still will enforce it if you go to work for another logistics company. Wow.
You need to read those non-competes before you sign them as well, right?
And that's the problem, with some of the former employees that I talked to, that if they asked to take their paperwork home and review it, that they were told their offer would be revoked. And so, when you're fresh out of college, it's your first job, you're ready to prove yourself, you're worth and value, and then, so you sign it because those student loans start coming after, don't go away. And so then they're on the hook. And so some are, unemployed, that were doing well and made good commission.
Mm-hmm.
They are now on unemployment, something that they never thought that they would have to experience.
So Clarissa, we have a viewer comment here, or a question actually, from Christopher Glosbach. He's a chief revenue officer from Shipwell, and basically he says, great article on TQL. One of the critical highlights outside of layoffs and COVID that stood out to him was the network impact due to the nature of TQL's platform, and basically not being able to support remote working.
Right. That sources say that they're using kind of an integrated system, and haven't updated their remote or virtual network in a long time, and that until this hit, it wasn't a concern, but that they quickly found out that it was crashing daily.
Yeah, and I'm sure the malware attack back, when was that, January? Or February? February.
Yes.
Didn't quite.
And so I have another piece that I'm working on because there was so much information. And so kind of how that they are trying to regain the trust from their customers since the data breach, and that's also kind of been a strain on the company.
Very good. Well,
interesting.
To read Clarissa's article, go to FreightWaves.com, and it's TQL, Bully of the, what was the title again, Clarissa?
Bully on the block.
Bully on the block, yes. Exactly right. So yeah, it's live on FreightWaves.com. Thank you very much for joining us, and enjoy the rest of your day, Clarissa.
Okay. Thanks so much.
You bet.
Bye.
Thanks, Clarissa. It's interesting stuff. You wonder what the motivation is behind some of these things. As if you're letting go of an employee because of performance, right? Why are you aggressively trying to keep them from working for a competitor? If they're a subpar employee, don't you kind of want them to go to the competitor?
Yeah,
not to be flippant about it, but
yeah.
To go to those lengths. The guy was, or the I don't know if it was a woman or man, was 2 days away from it being a full year, and they still went after him.
Yeah, I don't always understand that too. And going after other logistics companies for that is something I don't understand. And non-competes for people that aren't senior management, I don't really understand that as well. Non-solicitation, definitely. You don't want anyone walking out and
sense.
Calling on your customers. But to bar people from the industry that might be 24, 25 years old is what it is, I suppose, right?
Yeah, I agree. And the high pressure of you can't take this home to review it, sign it right now, or you don't have the job sounds like it'd be a fairly decent defense.
It does. It sounds like have you ever been in a timeshare meeting? Right?
I've made that mistake once.
They close you before you leave the door.
Yeah.
Definitely. So I think Craig is ready online. So we'll see. There he is right there. How are you doing today, Craig?
I'm doing all right. This new technology is always interesting.
It is. We were doing everything on the fly here in the studio and out of the studio and home studios, and it's always an adventure sometimes.
Yeah, it keeps you on your toes.
As soon as I get you familiar with one process, we end up improving it, we hope.
Yeah, definitely. We're testing new technologies and processes live on air every single day, and getting better and better, right?
Exciting stuff.
It is. So, Craig, what's your perspective of the freight markets as of now?
Yeah, I mean, look, I think we had predicted this. Actually, Zach Strickland and I, who is the Sultan of SONAR, I think his self-imposed title, had a bet that I had bet the freight market would drop below 9,000, or the OTVI, the outbound tender volume index, by tax date. This one tax to April 15th. It looks like I'm going to win that bet. because we're seeing volumes disintegrate. I think Zach was a bit more optimistic about freight volume staying high. I was a bit more pessimistic. I'm right, Zach. Afraid.
he's laughing over here. There's a couple.
And honestly, I'm not happy with this. I'd rather have high volumes, but the data had suggested that this was the surge was not the same.
Yeah, I see. Joanna has an article out on FreightWaves.com that rail volume right now resembles Christmas and Thanksgiving Day. There's a seismology study out there that the human activity and human noise put on Earth resembles around Christmas Day. So your prediction of something low like a holiday is boring out on many different data points.
Yeah, I mean, I could have gone with Christmas. I went in Labor Day just because Zach was so optimistic, and I thought I would pick the really simple number of using Labor Day as my number. But it could, if you look at Christmas, we see it drop below 7,000, which would be a really dramatic drop for this time of year. 9,000 is about a Labor Day volume. I thought that was a safe bet to be below, but I do think it could trend in the 7,500 to 8,000s. But we'll certainly watch that. One bit of news I thought was really interesting is that Los Angeles, California, has the cleanest air of all major cities this past week. So if you think about, if you've ever been to LA, how dirty the area is, but with taking all those cars off the roads, we're actually seeing much cleaner air in LA, and a telling sign of how much activity has really dropped in some of these major cities.
That's amazing. It almost begs the question, Craig, of, is it possible that we take a month off every year to try and do this type of thing? If we schedule it? I mean, we kind of jokingly, we've talked about that, but I mean...
I don't think anyone, including my wife, wants to have me at home for a month. And we're sort of reverting back to normal. I just can't see a situation where the entire economy takes off for a month. This is a very expensive and dangerous, in terms of just economic stability. It's a very dangerous set of circumstances. This is, if you look at the drop of and I know you guys have covered it, the employment numbers have dropped significantly. Economic activities dropped significantly. I don't think anyone wants to have this as a permanent fixture part of our economy. I do think it's interesting. I've been reading a lot on the automotive sector. Is that there's a belief among some auto analysts that while things, I think it was Allstate CEO had said this, is most driving, or a large percent of driving miles, is related to commuting back and forth between work. And people have been doing that 5 days a week. And what he has actually said is that there's a possibility that people may not go back to a full 5 day a week work when in the office, but may end up going to 3 days a week. And if that takes place, then we may see a pretty big impact. There also been a lot of pressure on the auto sector in the last couple of years, simply because of some demographic elements, because of the odd demand apps that are out there. The fact that young people have bought cars. The auto sector sort of hit peak auto is the theory. I do think that this is going to have a pretty profound impact on certain types of purchases, like autos and cars, and so we may see some part of the economy.
Right. So, I mean, tongue in cheek, do we shut down a month every year? Obviously taking it to an absurd conclusion, but there definitely could be some really good positive impacts and changes in the work week and how the world works and views that.
I mean, that's certainly one theory. The question is going to be, how long does it take to start a $23 trillion economy? I mean, this is a situation where, at least with the holidays, it's a very predictable, seasonal calendar. You know that there's going to be, mid-December to the end of December, you're going to have a slowdown. China also has 2 weeks out of the year, and one that we track a lot, which is Chinese New Year, where they basically just take off. The other being Golden Week, and so, and then some European countries also have significant holidays that they take during the summer and other parts of the year. Those are predictable. They're not, even though the Chinese New Year calendar moves around. It's a very predictable outcome where everyone is off duty. The challenge here is that because different states are going to have different apexes in the coronavirus, and they're going to end up going back to work at different times, the supply chain is going to sputter. It's not going to be consistent. There's going to be a lot of inconsistencies. In one theory that I've got is that it would have been better had the federal government mandated a lockdown across the entire economy versus letting each state and municipality sort of its own outcome, because it's very hard. It's connected as our global supply chains are, as connected as our economy is. It's very hard because certain businesses are going to come online at different times. And in some ways, it would have been better if we had a universal mandate so that everything was shutting down at the same time, and then it could come back effectively around the same time. But that's just not the way it's going to work. And again, this is all theory. We don't play by. So we're going to see how sort of sputtered action. So, and then, of course, in a democracy and in a capitalist economy, it's very difficult to do for the U.S. to do a forced mandate. So it's not surprising that there is an argument. Perhaps if we had done one systematic lockdown across the country, that perhaps as we sort of turn the economy back on, that it would repair faster.
Craig, on that note, restarting the economy, do you think that is more of a business question or more of a health question and safety question, right? When does it restart?
Yeah, in my mind, it's completely a health question. If you look at the last economic downturn was really related to systemic risks and bank leverage and housing leverage and mostly personal balance and corporate balance sheets. This is a different situation where the consumers and the businesses and the banks went in very healthy in this recession. This has been driven by a health issue. And so that's good. That's the good news. The bad news is that you're not going to get consumer activity, the largest part of our economy, 60 to 65% of our economy, is not going to come back in full force until consumers feel confident that it's safe for them to resume activity. So if you think about it, are you going to go to conventions and trade shows that are, if we don't have a health issue, or you're going to go to a place that has 5,000 people around it? Probably not. Are we going to see resumption of sporting activities? You think about college football coming up in the fall. Are you really going to go and Texas A&M? I don't know why anybody would go to that game, but why would you go back to A&M Stadium with 110,000 people? We're going to go to Alabama and watch college football. I suspect not, because that's an environment where the potential of getting sick is real. And so I think what we're going to see is it's going to be very difficult for the economy to come back in full force until we have some resolution from a health perspective where people feel confident they can resume activities. Are you going to get on an airplane and risk being sick? I just don't think so. So I think we have to answer the health question, and that needs to be the number one priority before we can really answer the economic question. And the problem is, the longer this goes on, the more long-term damage doing. Either the federal government is accumulating massive amounts of debt to sort of sustain things, or businesses just aren't going to survive. And let's just be honest, there are businesses that are not going to come back. And so you think about some of these national retailers that own brick and mortar stores that maybe you had some performing stores or stores that weren't as great. It's unlikely that we're going to see those stores resume. Even in Tennessee, there's a restaurant was based in Nashville called Craftworks. They own Logan's, they own Old Chicago, Gordon Biersch Breweries, etc. They laid off 1,000 employees. So it's unlikely that they're ever going to return. I'm not saying it's impossible. It's unlikely that we'll see a return at the scale it is. And so it's just these types of businesses, these particular consumer brands, when they go out, typically come back in the same fashion. We don't normally see businesses sort of resume. We may see a shell of Toys R Us, example of a company that went completely under and is now trying to make a comeback, limited stores and stuff.
So in this environment in transportation and logistics, we have a story on TQL out right now. What's your opinion on non-competes? Non-competes and not necessarily non-solicitations, but on those forums during this time where layoffs are basically necessary for the survival of a business as we go through this?
Yeah, I mean, look, I understand why businesses want non-competes. You make these significant investments in training people and resources, but the problem is there's not enforcement. First of all, in this environment where the ability to make income and people have invested years in these businesses, and then you're basically saying you can't work there for another year is ridiculous, or you can't work in the industry is ridiculous. I understand non-solicit, being able to solicit your existing customers or employees, that makes sense. But the bigger issue that I think should be discussed is regardless of whether it's right or wrong, or whether you want to have an aggressive approach towards these non-competes or not, there's just the practicality that they're not enforceable. I mean, you can't prevent someone from working inside the same industry. That's a very hard ask, unless you compensate them on exit. And I think one of the things that is not clear to me is that if TQL really was trying to protect their interests, perhaps offering some degree of quid pro quo would have helped them resolve that. But as far as I know, did not do that. And again, I don't have some knowledge of it, but perhaps that protected their interest a bit better. Regardless, this is an environment with unprecedented territory. Arrive Logistics handled things what appears to be different. They certainly basically let people out of these non-competes and stuff. And so I think that's fair. But the problem in logistics, as we all know, is that these non-competes have been around for decades. And whether or not they're enforceable, the companies can make significant threats to the employees that often don't have the resources or even knowledge to protect themselves. And the old adage is you can sue anybody for anything, and you can spend a lot of money in court, and if you have the big powers, you can outspend them. So I think that's my perspective. I don't have a lot of inside knowledge the way Clarissa does.
Yeah, so we were talking about crowds a while ago, conferences, sports. We've gone to a virtual conference May 5th and 6th, and I believe 7th now at home. What are your thoughts on the future of virtual conferences and what's coming up in the near future at FreightWaves?
It is interesting. The whole virtual experience I think is going to be a permanent fixture. I do think at some point people will want to go network and will want to get out of the house and get out and network. But I think companies are going to prioritize their spending. I think the corporate event business is not going to come back as quickly as some of the other parts of the economy. I can imagine that sporting events, you sort of look at the cycle of what comes back quickly. I think as soon as people that enjoy live concerts and live concert venues and sports will come back almost instantly. Once people feel comfortable with going out in public, corporate events are going to be different because I think companies are going to have reprioritized how much money they're willing to invest in those experiences, and are probably making significant investments now currently, and we see this in our customer base, to spend their energy and money on other avenues to reach clients and acquire customers. And so I think, even when you look at the money that we have spent at FreightWaves over the last, say, 24 months and going to events and conferences, and you start to evaluate, we spent $1,000 here, we spent $20,000 here, we spent $5,000, so forth and so on, and you start to evaluate sometimes that investment's hard to realize. And so companies, which tend to be far more rational than consumers and far more focused on the dollar signs than consumers, are going to be a bit more discriminating on events. I don't think the corporate event business comes back quickly. I think it's going to take some time. I think companies are not going to be willing to expose the potential risks of sending people back. I think consumers may go back to a sporting event they may go to a Baylor football game because you want to do that. But I don't think that the corporations will want to send people into potential issues that where they may end up sick or may end up exposing themselves in liability. Plus, they're probably going to question the rationale for spending a lot of money on these types of things. So I think that's going to be probably part of the economy that's slowest to come back.
Very good. Well,
and so virtual events are badass, right?
They are badass.
To do it, and we have ours coming up on May 5th, May through 7th, and May 5th through 7th, and we're very excited about it. A lot of activity. I think it is interesting is these are not Zoom conferences. They're much more complicated, sophisticated, and frankly more expensive than just putting on a Zoom sort of webinar. So we're going to see a level of, and I think companies start having to make those investments because there's going to be a clear separation between companies that make the investment and host a high quality event and companies that don't.
Very good. Thank you very much, Craig, for your time today.
Appreciate it, guys.
Yeah,
Thank you, Craig.
Have a great time.
Always insightful.
Always insightful, yes. Always insightful.
Yeah.
It's going to be it's been a struggle for the last few weeks in the world, not necessarily even the freight or transportation industry, but we're going to struggle on for the next few weeks until we can officially end this pandemic, which hopefully will be very soon.
Yeah, hopefully it will, and the recovery is going to be a bit of a struggle, and you got to be watching those freight markets and getting the latest news and understanding what is going on. And I think Craig talked about his views a little bit on the recovery, and it's going to be slow, and people are going to be unwilling to take those risks. When are they going to feel comfortable about getting out and going to those football games and so on and so forth? And I think a lot of that, quite frankly, Kevin, relies on what we see happening in other places that are starting to come back online, right?
Exactly right. There's risks and basically, especially in parts of China, that are coming, open again, and then maybe shutting down, and it's a careful dance. That
China's coming back
now.
online, and then you've got some European countries in the next week or so that are coming back in various stages. Right? Yeah. It's not just everything's open, go for it.
And Jimmy Bryant, basically, he says, do you see companies looking at the liability of sending staff to conferences? And that would be a definite yes, because I believe that if you go to a conference, I know if you work, say, in a grocery store, and you come down with COVID-19, then that's a workers' comp case. So I would imagine that it would be somewhat like a workers' comp case if you had employees go to either back to the office or to a conference anywhere, and you had an outbreak of COVID-19.
Yeah.
Right. So that's another risk to look out for.
Yeah, no, it definitely is. It's this feeling of what we're doing now in this fear factor, which is keeping us, it is flattening the curve and reducing the high numbers and the projections, but it then that lingers and we don't want to fall back and have a re-outbreak and then there's the fact does it go away and then reemerge every fall? There's that. There's
a lot of questions surrounding all of this. Lori Zeck, the president at Personal Logistics Assistance, says our teams have made a successful transition to working from home. Astounded that TQL has not.
And many have. I mean, we've done it here. We have the vast majority of FreightWaves working from home. There's only a few of us that come in, and it seems like we've transitioned quite well.
Exactly right. And Morton Mayotte is a national account executive at Armstrong, has a humorous response here that
I can tell.
On non-competes, maybe the reporter from the New York Post who asked President Trump yesterday if he'd pardoned Joe Exotic from the Tiger King could ask the question, can the government eliminate non-competes? So who knows? So there has been murmurs, and I think the management team at Megacore Logistics sent a letter to Congress, and there's been many letters to waive non-competes during this time of a national emergency. So there might be some words coming out of Congress and Washington, D.C. Related to this, at least in the short term.
Yeah. Yeah. I mean, I get it as well. Craig, stated it very well why they're in place. I see it, the non-compete issue, it needs to be there, needs to be signed. You don't want somebody coming in, you train them up, they build up a book of business, and then they can just walk out the door. But I think it changes things when it's the employee's choice to leave or whether the company's choice to terminate them. Doesn't seem like they should be on the same playing field.
I agree. I think we'll hear more about this coming up in the future. Let's get to what's coming on FreightWaves TV this week. And tomorrow we have What the Truck.
We do.
So what is going on What the Truck, Michael Vincent, with you and Tim Dooner?
So who are we talking to on What the Truck tomorrow? We have a number of people on there.
We have Anthony Zach, and Mike McNamara, and JT Engstrom, our own Chief Strategy Officer here at FreightWaves, and they're going to discuss the coronavirus impact on various pieces of the global supply chain and give an update on how the economy and freight markets are reacting domestically. Yeah,
that's Freightonomics. Right?
It is? Oh, that is Freightonomics.
Yeah,
I'm sorry.
I was like, wait a minute.
That was Freightonomics yesterday, so you can download that podcast. And view that anytime. It'll be a rerun on FreightWaves TV here quite a bit. And then we had Great Quarter Guys. We discussed 8Ks, really about liquidity and cash flow for transportation and logistics and material changes in businesses. And for public companies, they have to file an 8K to declare that to the market and investors. So we kind of went over 8Ks, how to read 8Ks, how to find 8Ks, and kind of be able to get really good market intelligence from monitoring those. And I know that Todd Maiden here at FreightWaves always monitors those and has articles on those 8Ks. So if you don't want to spend all the time looking for 8Ks and material differences and reporting, always check out FreightWaves.com.
Yeah, absolutely. So, I mean, Friday on What the Truck, we'll be talking about, have we hit the peak? Right?
Have we hit the peak?
Before the curve? And, we'll be following up on the TQL story as well. That's what we'll be talking about. And what's good. We go through what the good things that companies are bringing to the table right now, as far as everybody coming together and fighting and helping the fight against coronavirus and helping the economy and those that are out of work.
And I think we're going to talk a little bit about the SONAR and TruckStop.com promotion that is going on. This month, right?
That's right. Truckstop.com users can get SONAR for free for the month and combine those two tools and the power of having that knowledge of where those loads are and how the economy is looking or how the freight markets are looking, with the ability to quickly connect with those loads and those shippers is quite a tandem. So
it is, and basically you always walk people through that on your show, Freight Forecasting, which comes on later this afternoon at 4 p.m.
It does, 4 o'clock today. And
what are you going to be forecasting today, Michael Vincent?
Yeah, so today what I'm going to do is I'm going to go through and build out a market table and take it a little bit further and break it out into the different modes because you see these reports and we're reporting them. Obviously, volumes are coming down, rejections are coming down, but there are still hurdles out there for shippers and for carriers and for intermediaries, and there's plenty of opportunities that are out there. And so how to build these tables and quickly interpret the data so that you can find those opportunities within SONAR throughout the market tables.
Very good. And yesterday, Tuner and I did the latest episode of Put That Coffee Down, which is the Freight Sales podcast that we do every week, Wednesday at noon live. But you can catch that on tv.freightwaves.com or anywhere that podcasts are downloaded. And we talk about how you can use video in your sales game on an individual level. And basically, our sales staff here at SONAR uses it great. I mean, it uses it like pros on LinkedIn and social media. So if you're cruising LinkedIn or Facebook, you'll probably see one of our demos from one of our salespeople out there live at any one time.
Yeah, absolutely. And as always,
yes. What have we left out?
the St. Christopher Truckers Relief
Yes.
Fund.
Very important.
As we preach this all the time. Their biggest fundraiser, Kevin, is at the Mid-America Truck Show. Didn't happen. And that's their biggest fundraiser. So last year they donated $487,000, almost $500,000 to 344 truckers and their families. So these funds go to help truck drivers facing financial challenges due to illness or injury, to help out those drivers and their families. So they're missing out on their biggest fundraiser. So go to truckersfund.org. Help out the St. Christopher's Truckers Relief Fund. It's an important thing to do. Thank a trucker and go to truckerfund.com.
Yes, and on FreightWaves.com, you can also, this is really good, and it goes with the truckstop.com and SONAR or technology companies that are offering free solutions during this pandemic, and that's Symphony Retail AI, EKA Solutions, Fit to Pass, Instructional Technologies, Inc., and Post-Bid Ship. And you can find that article on FreightWaves.com.
Right on, Kevin.
Right on.
I guess that's